Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Precious metals are in the red. The pullback that we mentioned yesterday is here. This is people just capitalizing, taking some profits off the top as prices were extremely high. So right now there is a pullback that's actually healthy for markets. It shows strength and it shows growth. You want markets to pull back sometimes. You don't want the price to just keep going up, because that's a huge sign it's going to crash. So now silver can build some stability. Hopefully it stays above the support levels and we can go on from there. So this was expected. Do not be surprised. Don't start panic selling. Don't start freaking out. Precious metals need this. Any market goes up and down. As long as it's gradually going upwards, that's what we need to look for. So anyways, here's an article from SilverSeek from Ted Butler talking about how silver is falling into place. So, one wants to be careful about seeing things as previously predicted, but not so careful as to not recognize when things seem to be playing out exactly as expected. Recent news stories and events seem to be in accord with a number of my central themes, but I'll present the case as I see it and let you decide. Put simply, in addition to alleging a multi-decade price manipulation in COMEX, silver, and gold, I have claimed that JP Morgan attained the role of chief manipulator as a result of its takeover of Bear Stearns in 2008, in which JP Morgan ascended to the role of the largest COMEX short seller / manipulator. And this is true because JP Morgan is a shady company all around, regardless. They got caught spoofing on these exchanges, placing false buy orders, and it's just tragic to see the amount of manipulation they've put. 3 of their employees actually got arrested. Spoofing is a punishable crime, and just to see to the extent that they were doing it is absolutely ridiculous. So anyways, then in 2011, as silver prices neared $50, JP Morgan set about not only to abort the rally in silver and gold that year, but to immunize it from itself from future worry about its massive COMEX short position, put at risk when prices rose again. It did so by beginning to accumulate more physical gold and silver than anyone in modern times. All told, I estimate that JP Morgan has managed to accumulate 25 million ounces of physical gold and 1 billion ounces of physical silver from 2011 through present. A little over a year ago, I began alleging that JP Morgan started to position itself so as to massively double-cross its former big commercial short partners in crime who had always been working collusively with JP Morgan and continuously hoodwinking from managed money traders. Their main COMEX counterparties over the decades finally, nearly a year ago, I began to calculate twice a week the running open losses to the 8 big shorts in the COMEX gold and silver, first by estimating the open losses of the 7 biggest shorts of the net JP Morgan short positions, since JP Morgan was more protected by its massive physical positions. But more recently, just on the basis of the 8 biggest shorts, since JP Morgan completely covered its COMEX short positions. All that was left for gold, and particularly for silver prices, was to explode upward, as JP Morgan putting on the finishing touches and deciding when the moment of liftoff would be. Whether these premises turn out to be correct or incorrect, I reached them independently as time evolved, as I'm sure that subscribers would attest. Certainly, if I've misrepresented anything, please let me hear from you, as would be the last thing I would intend of. Oh, and along the way, I petitioned, some might say badgered, the regulators at the Justice Department, the CFTC, the CME Group, and JP Morgan itself. So, he's saying that JP Morgan has kept gold and silver prices in an extreme bubble and is manipulating the prices to their degree. They're in complete control of gold and silver prices. So if they want silver to stay down, it can stay down. And they're doing this by not only spoofing, but they have so much. They're like an extreme whale in the markets. They have so much of the metal, especially since silver is a smaller market, that they can actually, they can sell or buy when they choose, which could drop or rise prices. So, with that backdrop, I can't help but feel recent news articles about developments seem to confirm the premises laid out above. Certainly, all the recent stories on bank losses and precious metals trading are very much in sync with my running calculations of growing open losses to the biggest short sellers in gold and silver. It's no wonder Scotiabank is tripping over itself, trying to beat it out the door from precious metals trading, and is certainly not confined by Scotia, but includes HSBC and the new name CIBC. So what's interesting about the CIBC story is acknowledgement that the $60 million losses occurred on March 24th. Previously, HSBC was reported to have lost $200 million on one day in late March, but that exact day was not mentioned. What's interesting is that on March 24th, gold rocketed around $85 that day, and COMEX trading surged another $90 the next day, March 25th. You may recall this stunning $180 two-day rally in gold and $1.80 in silver came shortly after the deliberately rigged $230 plunge in gold prices over the 9 trading days until March 24th, when silver had fallen $5.50 in the days into March 24th. Shortly after the early March plunge and sharp snapback in gold and silver prices, and based upon COT report data flow, I reported that the principal architect and beneficiary of the price plunge and snapback appeared to be none other than JP Morgan, which along the smaller commercials, which I refer to them as Raptors, were the main buyers on the price plunge, essentially shutting out 8 or so of the biggest shorts. It was an egregious and deliberate price plunge that enabled JP Morgan to completely buy back its entire COMEX silver and short position at the expense of its former big short accomplices. So it never was JP Morgan in the better position to double-cross its former comrades in a collusion. I can't help but feel that recent events and news stories largely confirm essentially all my premises. Slowly but surely, news is starting to emerge of large losses to a number of banks due to precious metals trading. I would remind you that the genesis of losses was a year ago, when the big commercials waded onto short side of gold and silver aggressively, just as they had done on numerous occasions over the past few decades. But instead of quickly ringing the cashier register, as they had always done in the past few hundreds of millions of dollars by rigging prices lower in inducing managed money selling, the managed money selling never materialized, but instead the big commercials found themselves stuck in a position that continued to generate even larger open losses. At least commercials could count on the help of JP Morgan, which held large gold and silver positions for much of the time until mid-March. But having engineered or orchestrated the sharp and near unprecedented price smash in mid-March, JP Morgan rid itself of COMEX gold and silver short positions, leaving the big remaining shorts to fend for themselves. The record was to indicate that the big commercial shorts aren't fending particularly well. Now it would seem that JP Morgan has employed the knockout double cross punch by allowing few unsuspecting banks to borrow physical silver from JP Morgan to provide the ETFs with a non-recourse basis to ETFs, but very much on a recourse basis from borrowing banks to JP Morgan. Unwittingly to borrowing the banks, but very much appreciated by JP Morgan, is that the banks borrowing physical metal have just entered a new deal they would be much better off having made with the devil itself. More than 100 million ounces of physical silver have been purchased and deposited into the world's silver ETF, mostly into SLV, over the past 2 months. It is impossible that such a large purchase would not have had more dramatic upward impact on price if the metal wasn't being leased into the market. No other explanation could explain the lack of price response to such a large quantity of physical silver. And JP Morgan is the only entity capable of such transaction. It knows, but likely not the borrowing banks, that those borrowing that silver are now short in a manner that will cause great financial damage when silver prices rise. One question that might rise is the extent of JP Morgan's potential additional leasing of physical metal to other banks. Why would JP Morgan stop at 100 million ounces when they still have 900 million ounces of physical silver remaining? Why would it not put the borrowing banks even deeper into potential abyss by lending and creating silver short positions on hundreds of millions of ounces? I would contend that JP Morgan has some very practical limits on how deeply it allows the unsuspecting bank to dig a further short hole for themselves. The success of any great financial scam, such as the scams that JP Morgan has pulled off, to this point is both illegal accumulation of physical metals and now the leasing of some physical accumulation to create stored positions from which there is no easy escape, rests on victims remaining largely unaware that they have been criminally scammed. if it becomes too obvious that fraudulent means were deployed. That might provide a legitimate basis for renegating on the transaction. The trick is to take as much from the mark as is possible without alerting him that he has been scammed. As my dear departed silver mentor, my friend Izzy Friedman would say, you have to think like a criminal when studying the criminals. What I have described above are the makings for the most bullish case possible for silver. Up until now, it has largely been a gold show, with the big losses to the commercial shorts coming overwhelmingly from gold and not silver. Certainly, gold has climbed several $100s from last summer, while silver has just recently started to move higher and is still largely unchanged from year end. But whereas enough physical gold exists in the world to make the delivery at least plausible to close out the big short positions, that same equation would not appear to exist in silver. With the 8 big shorts holding close to 400 million ounces short on the COMEX, and now what appears to be a separate short position from 100 million ounces created over the last 2 months from leasing, it's hard to see where the 500 million ounces of silver necessary for actual delivery to close out the short position would come from. I suppose it could eventually come from JP Morgan, but at what price? At the risk of tempting the deity of humiliation or retribution of come-up-upons, it seems that the falling things coming into place at this point would be surprised if things further falling into place don't include sharply higher silver prices ahead. So, when you're talking about price manipulation, JP Morgan did get caught last year, and actually several times, by spoofing. So we know that there's a lot of illegal activity going on. The Dutch bank, they also got caught spoofing, and there's another bank as well. It's a punishable crime. JP Morgan also got caught with millions of dollars in misprinted gold bars, most likely going to be sold on the black market. And so you don't trust them at all, right? They did the same thing with Bitcoin. Remember when Jamie Dimon from Bitcoin called Bitcoin a scam, and then all of a sudden bought billions of dollars in Bitcoin right after the price shot down thousands of dollars, and then and it's just crazy to see that this stuff is actually happening. And I'm curious to what degree silver prices are actually being manipulated, and what prices would naturally be without this bubble. So not to say that silver prices can't rise, because like I said at the end of the article, there still is extremely high potential for silver prices to rise because of all this. So anyways, I'm curious what you think about this article. If you did enjoy this video, make sure to smash the like button. Also, make sure you subscribe if you're new. I post daily videos. So, stay tuned, because I'm going to give you the newest, latest, freshest information in the world of precious metals. Thanks for tuning in to Silver Slayer. I'll see you guys soon. Peace.